When we have a look at AMC today, we can see that in the day it's not done too bad. It's been a mixed story, but overall not looking too bad in my opinion, and climbing back up towards the end of day. And so far we're only a couple of minutes in, but after hours is looking okay. Now this is a video that's not intended to look at today's price action. We're looking at the price action that we want to see in the near future. We're talking about the Moass and what it could mean and how high we could go in the eventuality of it. If it sounds good, make sure to give us a like and subscribe. But as we always say, this is only opinion and it is not financial advice, so do your own research and come to your own conclusions. But now we shall dive in. So the first thing that we have to point out is some good DD from Reddit. This one's coming from user Qtane, and it was posted 15 hours ago. It's talking about the $4.5 trillion emergency repo loan to banks, and we're going to be diving into this one straight away. So what does this have to do with AMC? It just says read the article and you'll find out. We're going to start off over here, and we can see there's a lot of talk as to why the $4.5 trillion emergency repo loan made to major banks in the last quarter of 2019 actually went through. I haven't seen any good explanation as to why this occurred, says the user. Well, to start off, we look at one of the most popular tools used to predict recessions, and that is the US yield curve. In the last quarter of 2019, the US yield curve inverted. Now, when this happens over a longer period, this has been shown to be a reliable predictor of a recession, usually within 12 months. While I do not enter political discussion, we also cannot help to note within that time frame, it would almost certainly fall directly during 2020 elections. Regardless how you feel about the election, no president, Republican or Democrat, is going to enter the last of an election cycle with an incoming recession. In fact, it would almost be telling that President Trump stated that if Joe Biden won, the economy would collapse shortly thereafter. Enter the banks and Wall Street, who were on the receiving end of tearing down regulations, which would make it easier to, well, crime as they always have. Therefore, to starve off a recession during the election year and pass the buck on to the next president, or to the second term of the existing president if he won. A scheme was hatched up to prop up the bond market / yield curve and prevent a recession until after the election, by making a massive $4.5 trillion loan to the banks. Well, wait, why didn't this happen then? Well, enter a black swan, COVID. It doesn't matter how you feel about the pandemic, your opinion isn't considered. The only thing that needs to be considered is how the market and economy would deal with it, which is to say badly. This then forced government to once again put massive amounts of new cash, money printer goes on, into the economy, which kept the bond market alive, so as long as it kept getting money. Now jump forward to today. The Fed has announced it will speed up reducing its bond purchases that will raise interest rates and begin selling bonds back into the market. The Fed has $9 trillion worth of bond assets. Wait, why isn't this about yield curve? Yep, we're going to start looking at the yield curve. And then we have another link, and we're going to get onto the second part over here. What we have to see here is a 2 to 10 year rate that has been steadily climbing in the past 6 months until current. What I believe you are seeing is the shorter term yields are going up, causing the line from 2 to 30 years bonds to flatten, and what happens when it flattens? If it keeps going, the yield curve inverts. We contrast the Fed policies on raising interest rates, we can see this one here, further than most markets are algo run these days, and basically algos deal with the yield curve inversion by going ape. That inflation rates expected to continue into 2022 and 2023, and as well as that we can see it all goes into trouble. Normally the predictor is about 12 months out, however we have seen in the last 2 years the reaction speed that they go out, either gain or loss, has sped up massively. I highly suspect something based on that observation that a recession will come faster, come harder, and more likely be over faster depending on the reaction time of the government and Wall Street. Now, incredibly getting to our beloved stock. AMC and Wall Street and the banks went full bore greed propped up upon the juice from the federal government and kept making capital loans and all that was incredibly easy to get. Now, when we come down a bit further, coming to early 2021 and we have the apes, Wall Street is still at it though, feeding like pigs at companies that are going to go under. We buy up all the stock, we start using our positions. In fact, we do what Wall Street does, and we can see what this means overall. I think it all comes in to making sense right now. Basically, they shorted this to a very high extent, and now retail owns 80 to 90% of the float, and there are potentially massive synthetics out there, and margin debt is at an all-time high. So really, the yield curve inverse, algos bounce, and more importantly, apes continue to hold. They start looking to January the 21st of 2022, options chain, the video by Charles Gradit, I believe it is, that expose Citadel and how effed they are. Really, I think this one's easy enough to understand from what I have just read. We're looking at a place where we are still doing very well, and the economy isn't really doing so. We already know that what's going on in the economy is a little bit unpredictable at the moment, and especially right now we are seeing that downturn for the majority of 2022, even though we are only a week and a little bit in. So will 2022 be the year of the market crash? It is entirely possible. Again, the markets have gone up massively. We can see that it is definitely possible that, like this individual said, they have been putting that off until the new president gets in. And on top of that, the pandemic did kind of adjust things. So I do believe that whilst the markets are looking weak, this definitely can play into AMC in a positive way. And I think that will help us for the Moass in the future. Now, getting to those options for late this month, will that have an impact? Well, only time will tell. I have mixed feelings about them, but I think overall, if they are played fairly, it should do very well for us. Anyway, this is DD coming from this user over here 317 days ago. Now it seems old, but it's becoming more and more relevant as time goes on. Yes, it definitely is possible in my opinion. There's many people who have zero hope in AMC hitting 1,000, although it may seem impossible considering the price at that time, which believe it or not was $10 a share. Today we did something amazing, and of course this is talking about breaking past the prices that we have seen, but overall, because they have to cover their positions, the stock price is going to rise significantly. If the majority of people continue to hold and don't go for the small profits, it will pay off in the long run when the stock rises, and a bunch of call options are in the money as well, and obviously apes do not sell, so they have to just cover at whatever price we are willing to sell at. And going back to this one, which was published almost a full year ago, it's becoming more and more true by the day. Because back then, we didn't know what was going to happen with AMC. We thought most people were going to sell when it gets to 100, but fortunately for us, we had the run up to 70, and guess what? Nobody sold. People are just doubling down as time goes on. So I think really now people are here for the big money. I don't think many people are going to be selling at the low end, and like I said, everyone is not going to claim the maximum price of the Moass. If this squeezes to $100, $1,000, $100,000, $1 million, it doesn't matter what price you want to make up. Overall, not everybody is going to get the highest price. It's only the diamondest of diamonds hands that are going to get that high price. And really, of course, I'm not a financial advisor, but I do not recommend everybody holds out for the highest price. Of course, we can all hold out for a price that we are comfortable, and we should have our own plans. But really, the Moass is something that we have all been working on. We've been working individually on it and collectively. Some people are going to be comfortable to hold to the top, others are not. And of course, there are issues that do come with that. So pick a level where you are comfortable and make sure you are secure in your positions. As always, guys, thank you for watching the video, and I'll see you all again later on. Goodbye. Thank you for watching through till the end, but let me tell you about our Discord. So on your screen you'll be seeing the N2S Finance Discord. Obviously it is split into multiple sections. Basically at the top we have updates from me and all that kind of good stuff. If you scroll down a bit further we have the main sections where we focus on cryptos, SPACs and other hot stocks including penny stocks, even stable growth stocks as well, and we even have a special AMC GME chat. If you scroll down you can see some research and DD from the community. We also have funny memes and you can see actual contributions from members down here, and again if you do join us it is completely free, link is down below, but if you do want to become a Patreon you will actually get a pink sticker which will be displayed on your name, so your name will come up in pink as mine comes up in red down here, and that will show that you are a Patreon. But other than that guys, you can join completely for free down below. You do not have to pay anything if you do not want to. Thank you for watching, see you soon.